Connor Donaldson is with us today, representing the IAIS Secretariat, our partner in organizing these webinars. Connor will briefly give a few remarks on the topic on behalf of the IAIS. Welcome, Connor, and please go ahead.
No, thank you very much. And maybe just before going any further, I just confirm that everyone can hear me okay? Perfect.
Yes.
Well, I'm very honored to have the opportunity to say a few opening remarks during this important webinar today. And at the IAIS, I think it's important to recognize that we see the importance of diversity and inclusion in insurance, and we really do welcome the efforts that have been undertaken by our members as well as by our partners in terms of trying to address the challenges associated with diversity and inclusion. We recognized it as one of the priority themes for the IAIS's two-year roadmap of 2021 to 22, and we identified the need for us to undertake further work in this area. Currently, we're looking at conducting a stock take of existing work streams and initiatives currently underway by the IAIS, as well as our members, and other international organizations that are looking in the topic. In general, we look at this topic from a few different perspectives, and we'll need to look at the different aspects of diversity and inclusion, as it's a multidimensional topic, but from our perspective, really looking at it from four focus areas. Looking at how we can build off the substantial work that the IAIS and A2ii have undertaken on regulatory and supervisory practices in support of fair and appropriate financial inclusion. In particular, looking at focus areas such as women's access to appropriate risk management tools, as well looking at recent initiatives within the insurance industry and how supervisors have expressed their expectations in terms of diversity and inclusion. Next, also looking at how the IAIS and its member supervisors promote diversity within their own organizations. Within the next couple of months, the IAIS will outline broader activities that we'll be undertaking in line with these thematic areas. And I hope that over the course of 2021 into 2022 and well beyond, the IAIS will be a thought leader among standard-setting bodies in how we, as a global body of insurance supervisors and as representatives of the global supervisory community, can address diversity and inclusion within the financial system, as well as promote appropriate access to female and other groups that are traditionally underserved by insurance markets. So I look forward to today's dialogue. I'm really excited with the lineup that's on the phone today. And thank you very much, Manoj, and back over to you.
Thank you, Connor. I'm also pleased to say that we are joined by Suzette Vogelsang, who will be our moderator for today's webinar. Suzette is the head of the Banking, Insurance, Cooperative Financial Institutions, and Financial Market Infrastructure Supervision Department at the South African Reserve Bank. Suzette is also the IAIS Regional Coordinator for Sub-Saharan Africa and third Vice Chair to the IAIS Executive Committee representing emerging and developing markets. Suzette, welcome, and please go ahead.
Thank you very much, Manoj, and good morning, good afternoon, and good evening to everybody. I'm really looking forward to moderating this dialogue on women's access to insurance today. We have a range of speakers coming up who will provide both a supervisory and an insurance industry perspective. But to kick us off, we are joined by Katherine Miles. Katherine is a consultant to the A2ii and a technical expert on women's financial inclusion, with a focus on gender dimensions of inclusive insurance. She will present insights from A2ii's upcoming report on the role of insurance supervisors in boosting women's access to insurance. Following Katherine's presentation, we will then go into a panel discussion where we will hear from industry experts and supervisors. And joining the panel today is Susan Neely. She's the President and CEO of American Council of Life Insurers, ACIL, as well as Vice President of the Global Federation of Insurance Associations, JFIA, and was recently named to the B20 Financial and Infrastructure Task Force. Also joining us is Surya Kant Kumar. CEO at Vimor Sewa, an insurance cooperative for the Self-Employed Women's Association in India. And joining us, last but not least, somebody from my part of the world, Renew Audit, who is Director of Authorization and Supervision at the Financial Services Commission in Mauritius. I know we are all keen to start, so I'll hand over to the first speaker, Katherine Miles. Katherine, welcome, and the mic is yours.
Thank you, Suzette. So as Suzette's mentioned, today I'm going to be presenting to you insights from A2ii-IAIS' forthcoming report on women's access to insurance, which was commissioned with support, I should add, from the Swiss Development Corporation's SDC. And it's based on both desk research and also some key informant interviews as well. So firstly, in terms of the current status of women's access to insurance. Now, this is really difficult to assess due to a lack of comprehensive demand and supply side sex disaggregated data sets at either a global or a regional level. Now, on the demand side, the latest global Findex database, which is issued by the World Bank, doesn't capture insurance data. On the supply side, while the IMF's Financial Access Survey, the FAS, captures an insurance indicator, it doesn't ask for this data to be currently broken down by males and females. I should add, this is the data is provided to this by central banks usually, but I'm sure the insurance supervisors feed into that process. Yet, the positive news is we are actually seeing a really promising trend towards increased collection of disaggregated supply-side financial data. And this is driven by international commitments, for example, by the G20, G7. There's also the Alliance for Financial Inclusion's Dinero Action Plan. So that's central banks coming together, having made commitments around the collection of this type of data. And so as a result, we're starting to see that some sex disaggregated demand and supply side insurance data is starting to exist at a country level. For instance, on the demand side in Cambodia, for instance, there's also Ghana and Nigeria that are collecting sex disaggregated data. But supervisors collecting this data are dependent on insurers, and there are challenges in the process of this. And this is due to the interdependency in terms of consistent collection of the data, it being then fed up at a country level. And also there are issues related to the standard definitions that are applied. For instance, if you're looking at businesses, whether a business is women-owned or not, and how do you disaggregate that data? At the institutional level, some insurers are gathering disaggregated client data, and that may be in instances where it's not necessarily mandated at a country level, but they're still doing this. But more needs to be done also in this area. Providers only reported gender data last year for less than half of the products to the Microinsurance Network's annual survey. But there is good news, as say, not only is there an increase in this data being collected, but there's also growing guidance that exists to support the process for insurers and supervisors to be both gathering, so collecting the data and also using it. And there's also really a growing consensus around the role that insurance supervisors play within this data value chain in collecting that data. So turning now to the actual market itself. Now, women are increasingly recognised as both an and underserved market for inclusive insurance, but where there is high growth potential. It was estimated a couple of years ago that the annual women's market opportunity for the insurance industry globally will represent between 1.45 and 1.7 trillion US dollars by 2030. But there are challenges to taking advantage of this sort of market opportunity because there are gender diverse constraints that exist in insurance access and usage. So just to give you some examples, there are gender legal differences in access to identification documents, for instance, and that might influence whether an individual, a man or a woman, has documentation that they need in some context to meet the customary due diligence requirements that are set out to access insurance. So, for instance, in sub-Saharan Africa, women are 9% less likely than men to have identification documents. The GSMA estimates that women are 8% less likely to own a mobile phone than men, and 20% less likely to use mobile internet and own a smartphone. So that also creates challenges in terms of digital distribution of insurance as well to women's market segments. But we're seeing that insurers are responding to these constraints and market opportunities, and that's through looking at developing women-centric products that address some of these very specific risks that maybe different segments of women customers may perhaps face. And that includes through addressing these constraints through product features and distribution channels, and also value-added services. Insurers in Ghana, Nigeria, Bangladesh and the Philippines, amongst others, have launched insurance programs explicitly targeting women, and that's in partnership with the IFC's Women Insurance Programme. So there's some good examples there, and you can find detailed case studies on all of these and the impact it's had online. Women's World Banking is another example of an insurance intermediary that has worked to develop health microinsurance products which are available in multiple countries, for instance, in Jordan. And we're going to hear later on from Vimo Sewa in India, and there are other examples as well of products that have been developed. Briefly, in terms of the COVID context, because this has really had an impact and a gender differential impact. So in terms of how the economic fallout has affected women versus men. And really, there's a huge amount of evidence to show that in many instances, it's more severely economically hit women, and also enhanced in the insurance context, existing barriers that women have to access insurance. So, for instance, we've heard from an insurance intermediary, A2ii in East Africa, that their experience is that COVID-19 social distancing measures, for instance, have had implications in terms of their alternative distribution channels. So they use self-help groups, for instance, to distribute insurance, and if these can't meet, then they also can't access the women to be able to provide them with the insurance. So in terms of also this whole digital transition that has happened as a result of COVID, we're seeing that there has been this huge transition to online platforms, to both service insurance and distribute it, and other forms of financial services as well, which has had many benefits. But a barrier has been that, you know, if women are less likely to have access to smartphones, particularly in some of these emerging market contexts, you know, then they have had less access to these facilities. And also generally, women in some of the most contexts where they have been most severely hit by COVID, they have also had issues where they've had to cut they had cuts in their income, and that has affected their affordability, for instance, of insurance. So they've had to divert that to really meeting their basic requirements in terms of food and other daily necessities instead. If you look in terms of insurance supervisory responses, there's been some work that has been done on this. And what we have seen is none of the responses have actually taken a gender perspective to how they have looked at their pandemic responses in terms of regulation. So just sort of moving briefly to another point, which I think was picked up by Connor right at the beginning, which is in terms of gender diversity within insurance companies and within insurance regulators and supervisors. Now, there's a lot of evidence from the likes of the IMF and others around the real benefits of this in terms of governance. And so we see that there is a huge opportunity to increase the number of women who are in both in the workforce generally, but in the leadership of both insurance companies and insurance supervisors. But there's a huge gap at the moment. Unfortunately, there are fairly low levels of women's participation within the industry more broadly, and so more needs to be done on that side. And it's hoped that if we can do that, not only increase the governance, but also we can have a positive impact in being able to better service the diverse women's clients that there are. Turning then very specifically to how insurance policy and regulation can help. A2ii has done some work previously on this, and we're building on this with this study. But what we want to say, I guess, to begin with, is that these regulatory and supervisory approaches to insurance can both differentially and positively, but also negatively impact men and women and different groups of women and men as well. And that's because of these different vulnerabilities that we've talked about and constraints to insurance access and usage, such as the lower levels of women's ID documents, for instance, in some jurisdictions. And with that, it might be not just having an ID, but also having verification of address and other forms of identity documents, utility bills, to be able to support that. So What can regulatory insurance regulation do? Well, these different approaches can address these gender differences and access to ID documents, for instance. There's a really critical role that insurance supervisors can play to close the sex disaggregated insurance data gap. And there are examples of insurance supervisors collecting this sex disaggregated insurance data. There's some I have listed on the screen, and through mandating this or incentivizing this data can therefore be collected, and that is the first step in it being used. There are also opportunities to provide consumer protection measures that can address gender differential risks, recognising maybe, for instance, women's, in some contexts, lower paying capacity for insurance, which can be addressed through, say, taxing specific insurance premiums in a particular way that are targeted for a specific market segment, a lower income market segment, for instance. There's also a big trend globally. You see national financial inclusion strategies being developed, and within that there's a focus on insurance. There is a trend to integrate gender within sort of the financial access aspect of these strategies, but more could be done to integrate gender dimensions into the inclusion, the insurance aspects of these national financial inclusion strategies. There's also the opportunity to promote market development opportunities for new types of insurance products, which are tailored to different needs of different client groups. It's not just about women. Women are not all the same. There are different groups of women out there, and there are other different diversity characteristics that might affect risks that could be addressed through insurance. And so, yeah, having that flexibility to do that through promoting gender smart innovation in insurance, which can be incentivized through, say, proportionate regulation, through regulatory sandboxes and such like. There are opportunities there to be able to address these gender differential risks, but also meet these needs for different groups as well. And back to the point about women's participation in the insurance sector, both at regulatory level and also within the insurance companies themselves, there is a role that insurance supervisors can play in that as well, in terms of stimulating the increase of either reporting of women in these roles, sort of gender breakdown of women in insurance companies, but also within the organisations of insurance supervisors itself through its own practices. So turning specifically now to some recommendations that have emerged from our research, we've got 6 action areas that we've identified. There are sort of sub-actions, but when the report's released, you'll see related to this. But broadly speaking, the key aspect here would be to really drive the collection of sex disaggregated data so that that becomes used going forward. And so we say advocate to the IMF that its financial access survey does pilot the collection of sex disaggregated insurance data. It's had huge success with financial access data, so please take that forward in terms of insurance data. Secondly, provide guidance on the collection and use of sex disaggregated insurance data. There is some guidance out there more generally around financial access data, but this could be tailored to insurers and would be beneficial. And then there's this opportunity to integrate gender dimensions of inclusive insurance within national financial inclusion strategies and also insurance sector diagnostics. Break down the objectives and targets and have very specific strategies and activities that are targeting different groups, whether that's different subsets of women or other diversity characteristics as well, to sort of really include different groups and ensure they're getting access. There's also a key area of work around accounting for gender differential needs and constraints in customer due diligence requirements. That requires collaboration with the central bank, but innovative regulatory approaches related to that and product development and also distribution channels really are key to be able to include some of these harder to reach groups of women and men as well. There's also a real opportunity to coordinate with government agencies to integrate the gender dimensions of inclusive insurance into other national strategies. With climate change being such a massive agenda internationally and a huge global priority, there are huge risks and vulnerabilities that need to be addressed of diverse groups because of that, and insurance mechanisms play a role there. So ensuring the gender perspective is built into that as well. And then finally, really taking forward, and I'm really pleased to hear from Connor at the beginning that this is a priority as well, but really promoting women's participation in the insurance sector, both in industry and as insurance supervisors in the wider value chain as well. So I'll leave that there, but hopefully that's given you a bit of an overview of the findings of our report. And I look forward to discussing more and taking forward these actions. Thank you.
Thank you, Katherine, for that very insightful presentation. Just to the participants, please keep an eye on the A2ii-IAIS website where this report will be published very soon. Before I move on to the panel discussion, Katherine, can I ask you a quick question?
Absolutely.
Thanks. In what ways can insurance supervisors and the industry alike collect and use sex disaggregated data to better service the women's market and design of appropriate products?
Absolutely. Well, there are two parts of this. So firstly, you need to collect the data. So supervisors have options to either incentivize or mandate the collection of this data as part of the regular reporting process. So as insurers on a monthly basis or whatever frequency are providing this data to the supervisors, and sometimes it's directly to the central bank, this can be requested in a disaggregated format. However, in order for this to be provided to supervisors in a disaggregated format, there's really a need for both investments in systems and processes, both at the insurance supervisor level, but also at the insurer level as well, to make sure that they are collecting the data in this format. And so it really needs to be a joined up approach to do this, whether it's in terms of reporting templates, so that it's sort of broken down, so you have to fill in both male and female. And that's at, again, the insurer level and at the insurance supervisor level. And databases need to be adapted to be able to collect that. So it does require some investment, but this is really paying off. And some insurers are doing this anyway, but they're just maybe not able to submit in existing templates the data, because it maybe doesn't allow for them to provide it in broken down format. There's a need in sort of this whole start of the process of collecting this data for training, both at the supervisory level and at the insurance level. And this has been done in the banking sector successfully in many instances as well, to really understand why this data needs to be collected and ensure that it's being collected in a consistent way, so that then insights can be derived from it, and maintain also the quality of the data that's provided. So some guidance can be issued on how best to do that, and that can be issued by the supervisor. But then the second step, once you've got the data, what do you do with it, whether you're a supervisor or an insurer? And that is really key, because you don't just collect it for the sake of it. We're using this data to generate insights, and they're insights in terms of being able to improve policy and regulation, so it works for women as well as men. It works for all these different groups depending on different diversity characteristics. And then it can be used to support sort of both the changes to policy and regulation. It can also help track the level of inclusion of women versus men. I mean, we say, broadly speaking, women have lower levels of access to insurance, but we don't know that definitively, and it might not be the same everywhere, because most people are not collecting that data. But we know that there is a gender gap in financial access broadly, and so often it's seen as replicating for insurance as well. So there is a real need to gather this data, but then use it, and then you can use it to track progress towards national financial inclusion targets as well. And it will also be useful to then gather qualitative insights to support the data, because if there's a gender gap that shows, maybe not with everyone, but within like women-owned businesses, for instance, compared to male-owned businesses, you need to understand why. What is the problem? Why are like less women accessing insurance, for instance? And so it's important that the qualitative data is also gathered to support the quantitative. I hope that answers your question and is useful.
Yes, thank you very much, Katherine, and thanks again for your presentation.
Thank
you. I'd like to move over to our panel discussion. So I'm in turn going to ask each of the panel members a question, and I'm going to start off with Shrikant. So Vimusewa, I'm not sure if I'm pronouncing that right, has focused its efforts on extending insurance services, particular to low-income women and households. So Shreya, from your experience, what are some of the key barriers limiting women's access to financial services and insurance, and how has your organization addressed some of these barriers?
Thank you, Suzette. And there can be no better time than this middle of the pandemic when our poor informal women workers are struggling on both front, health as well as on economic front. You can imagine how they are facing few added barriers due to their gender differentiation, because they are lower participation in the informal formal employment. They are hardly covered by any employer protection systems. And some recent studies clearly shows by even women that even in government sponsored or supported social protection schemes, the women-led households are someone who left out of this coverage. And another aspect is the financial services is still in India is a male, it's considered to be a male domain. So obviously this is an added barrier. So how we overcome over last 3 decades in our experience, that when we started talking about the insurance for informal sector workers, it was very difficult to even convince traditional insurance companies that these women needs insurance to protect their risk. Obviously, we have to start educating our members, because they were not even aware that what type of vulnerability they are facing with, and what is the solution to those vulnerabilities. So we started from explaining about those vulnerabilities, to understanding those vulnerabilities, and to accept the solution like insurance to address those vulnerabilities. Obviously, it took extensive member education based on their context, to contextualize the concept of insurance in their own languages, in their own preferred mode, how socially those needs to be aligned based on their work need and as per their convenient timing. And we adopted different tools over the period of time, and we are now trying to move even to the digital education. We also focus that we need to give them informed choices rather than give some compulsory uninformed coverage. It may be a slow process, but it is a sustainable process. Then we try to make sure that distribution and all servicing needs to be led by women. Because women need some trust, some comfort, someone who can reach to at their doorstep, explain in their own language, understand. Because for women, a financial transaction is not just a transaction. It's exchanging few more emotions also. So we make sure that all our frontline workforce needs to led by women and from the community itself. Then comes about the claim servicing. As we are aware that insurance first experience of real truth in insurance is the claim servicing. So we handhold them, because for documentation, apart from poverty, gender is another barrier. They don't have proper documents. They can't access those documents from the service provider. So we do the entire supply chain handholding in entire supply chain. And last but not the least, we try to make the institutional inclusiveness. So Vimo Seva, if I talk about during our journey, when we registered Vimo Seva as a cooperative, which is a democratic institution, which represents an entire shareholder will be a woman. I am CEO of this organization, but I can't own a share in this institution. So you can imagine, I'm just executing the order of the entire shareholders of who are women. So this is a very strong message that how all inclusive and all women-led institutions can function. So what is the outcome? First outcome, by design, we make sure that the primary insurance holder will be woman. And that brings a lot of change in her decision-making power. Because if she is the primary member, insurance policy is in her name, so she can decide. Then obviously member education has increased her understanding about the risk, and not just about the insurance, but other financial aspect also. Obviously, it alleviates her anxieties of uncertainties, and then she started putting her surplus income into some other productive uses rather than putting it idle and fearing that something will happen in near future. Then she started taking care of her health. Unfortunately, in Indian society, women give priority to her health at last. She takes care of her family and hardly thinks about her. So after this financial security, she started taking care of her health also, and this increased also increased the financial inclusion, because in most of the cases insurance was the entry point, but she started exploring other financial products. So I would like to recommend few way forward steps based on our experiences over 3 decades, that we have to make sure that women needs to lead not just distribution, not just claim servicing, but entire decision making process in this entire insurance supply chain. And they are hardly represented at any level. Obviously, this can be an alternative livelihood for those women who are engaged into it and working with the community. We have to do a lot of intensive member education. And unfortunately, here I would request regulators and government, because unfortunately, commercial insurers were failed to do so over a few decades. Then we have to start since beginning to reduce the digital gap, because already there is this insurance gap, there is understanding gap, and there is another front we are opening, that is digital inclusion. If you will not work since beginning, this digital gap is going to increase and make more exclusion in coming days. Then we have to bring some regulations so that it can cover the need of the women. As I mentioned, that these poor women faces multiple risks. They don't have the time, they don't have the understanding and resources to manage multiple products. So bring such a unique and universal products in one coverage, which can cover different risks. Obviously, you have to give some institutional boost, and you have to make sure that some community owned member led entities start entering into the real game, become insurer. You cannot keep them on the boundary line and expect them financial insurance inclusion. So you have to lower the entry barrier, and regulator across the globe has to work and reduce the capital, and encourage these women-led entities so that they understand the need of these women. They can work closely with them. They can design policies. They can design system processes for them. For example, if we talk about the India, the current capital requirement in India is about 14 million US dollar. It needs to be maybe around 2 or 3 million US dollars, so that some poor community-owned entities can enter and they can talk about some social inclusion also. So these are some of the aspects based on our 3 decades of experience. I would like to recommend, and I would like to request to the regulator across the globe, and particularly in India, that if we are really thinking about what earlier speaker talks, not just data, but based on that data, we should decide some way forward and take some decisions so that it can help the poor women. And this pandemic has proved beyond the doubt that poor needs more helping hand than ever. Thank you.
Thank you very much, Cherie. If I can then move over to Renaud. So as an insurance supervisor, can you maybe give us an indication of what you think the key role is for supervisors in adapting the regulatory and supervisory approach to take into account women's specific needs? And this is a nice follow-up from some of the comments that Sharia just made. Renaud, if I can give you the mic.
Thank you, Suzette. I think that's an excellent question as a follow-up from what we've heard from Katherine and Shiri. It's like, where does the supervisor's role fits into all this? While one, as a regulator, perhaps I can very easily argue that the way our regulations or laws are drafted Unlike, I think, what Katherine said earlier on, they are very gender neutral. I would have said they make no distinction between any segment of the gender. But I think seeing the research which have been coming over a lot of years, and also particularly the new reality we're living in now with COVID, I think it is changing the perception of the supervisors that yes, some more work has to be done, which goes beyond the role of financial literacy, but perhaps more focused approach has to come to some gender, to bring some gender equity into the equation. This is what I would think of, and I'll explain myself what I mean by that. I think as regulators, we always have the statutory objective to make sure that we promote financial education and empower consumers. But I think we have been very mindful that when in so doing, whether how important is the gender equity in all this equation, because I agree with Katherine that disaggregate data, particularly for insurance, is very, very limited. But we do carry out some other data, which is, I think you will see my focus in today's intervention is very much from gender equity and perhaps bringing data and technology in, because some of those data which may not be disaggregated at a sectoral level, but even if we capture it at a national level, they give us strong pointers as to where things are coming out strong and more work can be done to encourage it, or where we really have a big challenge and perhaps women particularly have to be given perhaps more has to be looked with more sensitivity to have more inclusion and so on. I don't know how many of the members joining in today knows about Mauritius as an IFC and what exactly, where does Mauritius sits in the gender equity. Suzette, if you allow me, I will just perhaps give an overall orientation of Mauritius, how it fits in from a national level, and then as a supervisor, what exactly where do we fit in? If you're okay with that approach, please. Thank you. I think from giving a bigger picture from a national level for Mauritius, I think from a gender equity perspective, if I may say so, I think women have started coming in very early into the equation, and I'm talking about 1975, if the memory serves me right, where actually the first female minister was made in charge of women's affairs. And then I think Mauritius has as a jurisdiction, has joined the right blocks. It has signed the Declaration for UN Convention for Elimination of Discrimination Against Women. And also being a regional bloc, it is a member of SADC and has signed the Declaration of Gender and Development. And it has put the right bits in from a national level. And recently in 2020, it has adopted a national strategy and an action plan for 2020 to 2024, which is very much on gender based, right? It provided specifically for gender bias, violence. It has gone into some supervisory products like no guarantee loan assistance, particularly focused for women as startups, which goes to 500,000 with very low interest rates of 3%. It has allowed women to come back to work as a program over 35 years, perhaps, which is a challenge, and it is showing some results. It has set up women empowerment centers all around Mauritius, and that helps regulators as well when we want to do our financial literacy programs or want to get a sense as to how it is feeling on the ground. I think overall, and I will again emphasize the statistics again from a woman's perspective, because they feed to all the discussions which we are having today, that going forward, what needs to be changed. So from a Mauritian perspective, the population of women is almost 50%, right? But when we look at the literacy rate, it's almost 89%. So women in Mauritius are 89% literate. And over some years, it has shown the labor market in Mauritius for female has shown the participation rate has remained really elevated. It has been stagnant for 45% over some time, and I think that is good. Although with COVID now, the unemployment rate is affecting women more, as mentioned, than male. Now, coming very close to home in financial services sector, we're seeing that really 8,600 to be approximate female are employed in the financial services sector directly, and that means banking and the non-banking, including insurance as well. So 60% are basically into the non-banking sector, including including insurance. So what does that mean? We look at really at the micro level, that this is where the challenge comes. When we apply these statistics, which look good pointers, but we apply it in the context of the disparity, we will see that when it is coming to the decision making or risk management roles, which are the managerial roles or the senior roles, only 110 women are involved in the insurance sector. Whereas on the technical, which is almost 50% down from the male members, but when it's coming to the technical levels and the support levels, the numbers is almost double than the male participation. So this is where the gender disparity comes in. But the only silver lining in all this is that when I look at the trends of 18 and 19, and I think 20 is not the right year to say that, when the new recruits are coming in, we're seeing an uprise of nearly 13% of female population coming into the sector. So I think that is something which looks good. Now, coming down to, I'll just take an example of us supervisor as a regulator for the non-banking. When we look here, because you drive policies, you have an influence on the drafting of the legislation, and so on. So what is the size of the population in Mauritius for the supervisor, for the non-banking life financial services commission? Encouragingly, 61% of the staff force is actually female. And out of that, 67% are holding managerial and executive roles. So if I just give you one example, let's say after the CEO, we have 3 directors. Out of the 3 directors, 2 are male, 2 are female, including myself. So what has it done as regulators in-house? Again, I'm talking, it has driven policies where gender parity has been into the equation. For example, equal opportunity policies. For example, giving flexibility on working from home. And this has really helped during COVID times, although it was not intended at that point of time. And any anti-discrimination or any harassment policy sounds very simple, but I think it just empowers women. And particularly for the training side of things, there is more sponsorships coming on the education and on the leadership and the mentoring program. For example, 3 of our female staff at the moment are going through the Women World Bank and with Oxford, and I think A2ii sponsors those programs on the leadership, growing them into the next role. So this is how broadly it is looking. And now from the governance perspective, which is legislated, we are requiring public companies, for example, to have at least 1 woman on their board, right? So that is a good start. That is really driving towards the future we want. And very interesting, as recent as last week, what has come to the equation from a private sector, and I think that is very, very encouraging, from large conglomerates who are very actively involved in the banking and also the non-banking. We're seeing that they are coming up with very targeted milestones for themselves as a business, where they are going beyond protecting women as for their human rights, but taking it as a UN SDG goals, and they want to have women as in their leadership roles, or they have set target until 2030, we will step up our population of women and grow them into the leadership role. So that's a very different dynamics which is coming into the equation. And I think that is something very powerful as a message coming from the private sector. Now, coming back precisely to your question as a regulator, what else is being done or can be done? I think financial literacy is the key element. I think this is something which is never to be taken for granted. Although we can become more focused, more forceful. For example, in Mauritius, the Financial Services Commission has created a separate fund. It's called the Financial Services Fund. It's created by the statute. It's independent of the Commission as a regulator. And the aim is to develop financial literacy programs. And what they do, particularly for insurance, they have done is they reach out to these women empowerment centers at repeated frequency. They explain the very basics, the role of the intermediaries, the key factors they need to look at the insurance contracts, what are their roles, what are their responsibilities. So they go on hammering back again and again to encourage women as to how important insurance is in the equation. Now, the second important thing which has come into this, there was a blueprint exercise which was carried out for Mauritius for the 10-year strategy. And one of the key enablers in that is actually the technology, the fintech strategy, and that whole digitalization. So I think that brings a lot of uniqueness into the whole product lines for insurance, and also how the accessibility. I think one of the important features in financial inclusion, even from a regulatory perspective, is how not only you make them aware, but how do you make them available of the product. I think Shrikant just mentioned that is like not a very complex but very unique, very focused products. How do you make them aware of this? How do you make sure that there is an accessibility to it? For example, we have started a peer-to-peer lending platform, optimizing the digitalization to bringing it to the traditional forum of lending. It is very easy, much easier than the traditional. You go to a bank, you can get loan after a long time. You go this platform, you can get it within three minutes, and I think they put it up on their website as well. How did it grow? Just as an example, we had introduced 3 years back something called the regulatory sandbox. And that's where this whole project had evolved. And from a regulatory sandbox, it moved to the full-fledged regulation under the supervision of the regulator, like FSC. So I think those are the things which are becoming very focused. Now, whether a P2P lending platform can converge to a P2P insurance platform, I think the answer is why not? So these are the few things which are coming into the equation. I hope I just wanted to give you a bigger perspective to what's happening on my side. Thank you.
Yeah, thank you very much, Renu. That was very, very interesting. So if I can move over to Susan, and Susan, I did mention in the introductory comment that you recently joined the B20. So just from that perspective, I understand the B20 has just launched a special initiative on women's empowerment. Please, can you tell us a little bit more about this initiative and what it seeks to achieve? Thanks, Suzette.
Yes, well, thank you. It is good to be part of this dialogue on this important topic. I think, as Connor said at the very beginning, we can't solve big problems without focus and clarity of the objective. And so I commend A2ii and IAIS and all that are participating in this discussion for the focus that we have on this important topic. And I think that is also what the B20 is trying to accomplish. The B20 is the official forum for dialogue between the global business community and the G20, and they have created this special initiative on women's empowerment and are focusing on the very things that Shri and Renu have just talked about. Because the problem of women's sort of financial security broadly, which insurance is an important piece of that, has multiple components to it. Pay equity and the gap in earnings that women have, I think, between men and women the world over, the need to take time off to care for family members. In the US, we talk about it as paid family medical leave, but the ability to take time off and have some income replacement so you're not losing income, and the ability to advance your family's financial security goals. Financial literacy and financial knowledge, another important problem or need that we need to address, as Renu said. The George Washington University just did a study of women globally, and all around the world, women lack confidence in even having conversations about their financial security issues. At the same time, 70% of women are going to be solely responsible for their finances at some point in their life, if not their entire adult life. There was a specific question about testing women's financial literacy, and there was the option of don't know, and the majority of respondents picked don't know. But then when you removed that option of don't know, they actually answered the question correctly. So just the confidence to even begin having the conversation is an important need. So I get the B20, a special initiative on women's empowerment, is looking at all of these things. I can say on behalf of the private insurance sector that there are initiatives and efforts underway around the globe really to address these needs of women. And one of the things that the Global Federation of Insurance Associations is trying to do is just do a stock taking of the best practices underway. And I guess I will say it's inspiring. We have a lot of need and a long way to go, but it's inspiring how much is already happening. The French Federation has a program. Our colleagues in Mexico, the Insurance Association, AMIS, has a partnership with their regulator around financial literacy for Spanish-speaking women. We have efforts going elsewhere in Europe and in Asia and in South America and in the States. So one of the things we're doing, in addition to, of course, A2i and the micro insurance network. So we're trying to gather all this and make sure that's included in the B20 report, because knowledge and best practices underway are an important part of getting to a solution. So I will stop there because I know we want a little bit of time for questions from the participants today, and I will give it back to you.
Thank you very much, Susan. I mean, having listened to all of you, for me, just three key takeaways. And I mean, there's a lot of takeaways, but just three that came out of the discussion around is that the dynamics and role of women in society is changing and drastically changing. There's a definite need for insurers to design products that meets the needs of women and not, use the stock standard products that's there. Consumer education, a big thing that's coming out. And I guess lastly, the issue around data, because you can only know what you know if you've got some concrete data to look at it, but also then to monitor any future success in this. So thank you very much to you, Susan, to you, Shreya, and to you, Renu, for your presentations or your interventions today. I can open the floor now for any questions from the participants. I just want to ask Manoj just to help me here to see if there's any questions that came through that I'm not seeing, or if there's any hands up.
So we do have a couple of questions that we had in advance, and there's one on your chat box, if you could refer to Suzette, otherwise I could read it up here as well.
No, sure, I do know that. Okay. So can I ask each of the panelists, and Katherine, you as well, if you can just in 30 seconds give a response on how can the insurance sector as a whole leverage on digitalization efforts to address traditional barriers that hamper access to insurance for women. And then maybe I can start off in the sequence that we had. So Katherine, if you can go first, please.
So I think with digitalization these days, you're seeing, certainly in some markets, I think of Bangladesh, for instance, a lot of informal women entrepreneurs being sort of aggregated on digital platforms as a way to sell their goods and services, and they're not in the formal system necessarily, but there are ways in which you can then potentially distribute insurance to these aggregated groups of women who are sort of operating in this sort of informal sector through working with these platforms. and tailoring insurance products to their needs. And that is from the insurance provider perspective. In terms of then from the supervisor, there is then the opportunity to allow these sorts of platforms to be able to offer and distribute insurance to get to some of these hard to reach groups. So it's maybe not the angle you were thinking of, but I think in some markets this is potentially a way to get to certain groups of women that, particularly at least when I was interviewing them recently, have been crying out for insurance products for business continuity, for instance, to support them through the COVID crisis. Thank you.
Thanks, Katherine. Shreya, your response?
Yes. So, I mean, certainly India being one of the largest market of digital penetration, digital tool is going to be very helpful. But as I mentioned, the digital gap is something which we cannot ignore. And since beginning, we have to make sure that this digital gap should not increase further. And now informal sector workers are using digital platforms very extensively. They are also trying to learn. Our members are also trying to use in their own way, in their own languages, and doing a lot of transaction. I can give example of our Vimosave also. Before pandemic, it was not even 5 to 7% transaction was happening digitally, and now it's around 60% transaction is happening on digitally. Obviously, pandemic has played a role, but people also started learning using these things. But still, this digital gap, and particularly access to those services by women folk, maybe family has those accesses, but it may not be in the hand of those women. So we have to make sure that they access it. Then only they can use it. If they don't have those access, they can't use it. So ultimately, we have to see it at more micro level rather than as a country and as a global perspective. We have to see how at a family level women are accessing those tools. Then only it can be helpful. Thank you.
Thank you. Renu, your perspective?
I think absolutely, Suzette. I mean, this is something which is really unavoidable. I think avoiding disruption is unavoidable, I think, going forward. But I think while it can provide more accessibility and affordability, depending on how the apps are developed and reached out to rural areas, to women in particular, that is the developmental side of it. But I think it will the underlying implications of that cannot be ignored as well, and that's a supervisor talking, in the sense that it comes with, for example, what is privacy rights attached to it? What is the cyber securities? Because these are the things which are equally becoming very, very important when you're reaching out through and utilizing digitalization and technology. So it's not growing products and bringing it, or growing apps and bringing it, but also mitigating the risk associated to it. I think equally has to be taken into consideration. Thank you.
Thanks. Susan, your perspective?
Yes, well, I would echo, as Shreya said, for women who have access to to technology and can communicate digitally. I think there are great opportunities to address some of the very issues we've talked about. So the Minerva Financial Literacy Program in Mexico is a great example where the entire curriculum is delivered online, and they're trying to engage women through WhatsApp, where they live and work and are tuned in, and make the content very in chunks so that it's easy to digest and participate. We would say in the US that digital innovation throughout the pandemic has allowed us to deliver, to engage with consumers and prospective policyholders digitally, and make it so much easier to communicate and give them information on these important financial security products. So that's something we would like from a regulatory standpoint to have permission to continue, because again, it's just easier for consumers that have access to digital communications to participate that way in making decisions on products that are important to them.
Thank you. Thank you very much. And then again, a big thanks to my panelists today for their insight and information. It has been my pleasure to moderate this dialogue. And again, thanks to the A2ii and the IAS for organizing this session. I am conscious of time, so I will hand now over to Manoj for some closing announcements. Thank you.
Great. Thank you, Suzette, and many thanks to our excellent speakers today, Katherine Miles, Susan Neely, Shrikant, and Renu Adit. And a special thanks, of course, to you as well, Suzette, for moderating the dialogue so deftly. And thank you for the participants for listening in, and hopefully there was some good value that they could take away from it. In terms of upcoming events, the next dialogue in the IAIS A2ii series will be taking place on the 8th of July on climate-related risks in the insurance sector. Keep an eye on our website for more information. Till then, thanks again and goodbye.
Thank you.
Thank you. Bye.